Hello everybody, welcome to the 5th episode of Mortgages Made Easy. Title of today's episode is Residential Mortgages. Just a quick thank you, as usual, to everybody for liking and sharing the videos. Hopefully it is making mortgages easier. So today we're going to try and take it back a little bit, really simplify things, and just discuss what a residential mortgage is. Hopefully it should be able to make things a bit more understandable for everyone, but probably more focused a little bit on first-time buyers or people who just want to know a little bit about mortgages. Anybody who knows me will know that I get great satisfaction from working with first-time buyers. I understand they have more questions, they have more queries, and due to my previous employment, I'm now seeing some young people who used to come in the charity that I used to work in, getting mortgages from me, which is amazing, but yeah, does make me feel quite old. Anyway, residential mortgages. What is a residential mortgage? So it is basically a secured loan given to you by the bank, building society or lender. You'll have to put a deposit down and they'll charge you interest on having that loan. Now, secured means that it's secured on the property. So as you can normally see in a lot of adverts for mortgages, do not keep the repayments on your mortgage, your home is in danger of being repossessed. So it's secured, not like a credit card, which is unsecured, it's secured. So how do you get one? Basically, you've got to start by saving a deposit. At the minute, 10% is the smallest deposit which you'll be able to put down. So if I say something like loan to value, you're probably thinking, oh my goodness me, what's he on right there? Yeah, loan to value. So it's the amount that you're going to borrow to the value of the property. And the bit in between is the deposit. I'm not going to go for an exhaustive list. I'm just going to reel off some which are quite they happen all the time. So savings, gifted deposit from mum, dad. It can be a family member now as well with some lenders. They just sign everybody who gives a gift just signs a form to say they have no legal right over the property. We've also got Forces Help to Buy, which is quite a good scheme for the guys in the forces. You get your deposit, get it ready to put down. And let's just give an example of 100 grand. So you've saved 10,000, or you've had 10,000 gifted to you, or you put the two together. So then you're looking for a mortgage then of 90,000, right? So you've got come to me. We do the affordability, which I've discussed in other videos. If you want to go and check them out, go and check them out. Do the affordability, and when I say it fits, I mean it fits. It's affordable from my point of view. So then we look then and see what mortgages are available out there. Now the mortgage, i.e. the secured loan, the lender is going to charge you an interest rate to borrow that money over that period of time. So the lower the interest rate, the cheaper it is to borrow that money. And every time you make a payment off your mortgage, if you go for a repayment mortgage, you'll be paying the interest off and a little bit off the capital, which is your house. So we're looking at trying to get you the best deal with the lowest interest rates, which fits your needs. So then that'll obviously affect your monthly payments. And that's the mortgage broker's job, is to source the best deal out there for your specific needs, which is affordable. So what's the story with sort of different interest rates on different mortgages then? So you can have the most common one at the moment, and since I've been doing this job, has been fixed. So basically, you start your mortgage, and let's say you had 90,000, interest rate of 2%. Now, you have it fixed for the first 2 years. The interest rate is fixed. That then fixes your payments. So for example, £400. So then you know for the next 24 months, you are going to be paying out £400. Simple as that. When it comes to the end of that fixed term, those 24 months, we then look again at remortgaging and see if we can get a better deal, or product transferring. Product transfer is when you stay with the same company. So for example, if you use Halifax, we'd look to see if there's any other deals out there which were better. If they were, we'd agree with them and then give you another fixed term deal if that's what suited you, or we keep with Halifax and there'll be a product transfer. So your interest rate there is fixed. After the fixed term ends, if you don't remortgage with a different company or you don't product transfer, you go up to what's called the standard variable rate. Now, this is the interest rate is a lot higher. I can't pull any examples off the top of my head because they'd be inaccurate, but yeah, so you'd be paying more money per month for your mortgage. So that mortgage might go from £400 up to 400, let's just say for sake of argument, 460. And that 60 quid is basically, you're just giving the bank that money for nothing because you're not paying anything more off the capital of your house. You're just giving them the money back for the interest. So that's the interest rate. There are other interest rates out there, but not to overcomplicate it for this. I think the ones you need to be aware of: a fixed term, standard variable, and the standard variable comes after the fixed term. Interest rates are quite low at the moment, but that's our job to source the best products for you. Quick couple of other things you might do is talk about term, fixed term, I just said then. So when I said fixed term, that's at the start of your mortgage when that interest rate is fixed. And you can do it for 2 years, 3 years, 5 years, 7 years. I even did a 10-year fixed about a month ago. But you know, you've got, when you first, well, it depends on your individual situation, but what I normally say is 2 years, and then you can assess exactly where you are and you've got comfortable within your house, and then you can reassess your finances. But it does depend on each situation. So that's fixed term. And then you might hear me say term again. You're like, oh my God, what's all these terms all about? Well, then that's the overall term of the mortgage then. So the overall term of the loan that the bank is going to give you. So depending on your age, I think the maximum is 40 with a couple of banks, but normally the maximum is 35-year term. So that's 35-year term. And basically, the longer you go, the smaller the payments are per month to make it affordable. So normally people get freaked out. Oh my God, we've got a 35-year loan, this bank secured on the house. Not really. You've got to take that into consideration, yes, but the term can be changed over the lifetime when you come to remortgage. So the overall term could be 20 years, could be 25. People are the job is to get you to pay off your mortgage, and then, because it's the biggest financial investment you're going to have, to be mortgage free, and then hopefully you can then, well, along the way you might manage that money how you wish anyway. In a nutshell, that's it really. There are loads of different mortgage products, there's loads of different rates, but they're the key things. So the mortgage is a secured loan from the bank. We pay off the capital and the interest over a term, say, let's for example, 25 years. Most instances that I'm dealing with, you have a fixed term to start with, of fixing the interest rate to keep the payments at the same. So 2 years, 5 years. In the example we used, it was 2 years, 24 months. So then your mortgage payment would be fixed for those 2 years. If you remember then, it go up on the standard variable rate, so we try and remortgage you. Excuse me. Loan to value, that is the loan to the value of the property. At the moment, 10% is the smallest deposit. Last year was 5%. Deposits can be gifted, forces Help to Buy, savings, several others out there. Just reference the internet for that. And like I said, the overall term is the length of the mortgage. So I've repeated myself a little bit there, but I just wanted to put it in basics, exactly what a residential mortgage is. There's plenty of websites out there to have a look, but please, if you need to, send me a message. I'd be happy to talk about mortgages, putting plans in place, getting your credit in place, seeing things are affordable. And so you can plan as long as you want up front. That's my job, is to try and help people to get their ducks in a line. So anybody is looking for a mortgage, first time buyers, just general information, please send me a message, send them my way, and I'll be more than happy to work with them, set them up for when they're ready to go. Thank you very much for watching. Thanks for sharing. And as usual, the credit file link will be in the comments. DM me for appointments, and I look forward to speaking to you and working with you in the future. Thank you very much.